So this is part of our Smart Money personal finance classes, and today we're going to be focusing on buying a home. And I want to share just some of the ins and outs of the home buying process with you. And myself, I'm a teacher at Sauk Prairie High School. I've been there for 29 years, and I'm also a financial literacy advocate. I have spoke to different groups around the state and a couple times in Washington, D.C. and in California about financial literacy topics. And I've done some work for some other financial institutions and things as well. I'm an advisory member to the Governor's Council on Financial Literacy, which is a state organization that we have. Governor Walker and now Governor Evers are really behind the whole financial literacy movement, and I'm really proud to be part of that. I'm also a Next Gen Personal Finance Fellow, and you'll see some references to Next Gen. It's a financial literacy company, and they provide free information to teachers to share with their students. To start, I have a little question of the day for you. And that question is, can you name one of the 3 fastest growing U.S. cities as measured by number of new residents who came between 2016 and 2017? Any guesses? Yes. All right, well, here we go. San Antonio, Texas is the number 1. When you look at San Antonio, Dallas, and Fort Worth, especially the 3 of those 5 that are Texas, the big question is what's going on in Texas? Well, a couple of things. First of all, you've got some industry that's there. You've got the oil industry that's going on. But if you've ever looked at property values in Texas, they're really, really cheap. Now, that's changing because the big movement is there. But as of right now, those are the top cities right there as far as for growth. So, are you ready? What I'd like you to do, in your packet, there is a quiz. And I'd like you to take a look at these questions real quick, and we'll run through them. And when you get done, you got answers in the back of your packet, but I want you to just take a stab at it and see how you do. Just 10 quick questions here. And again, just tell whether it's true or false. So the first one, you should get pre-approved for your mortgage before you start looking at houses. True or false? Number 2, before you apply for a mortgage, it's best to open up some new credit cards to boost your credit rating. True or false? Number 3, the purchase price of your home should be as close as possible to the mortgage amount that you've been approved for. True or false? And number 4, your monthly mortgage payment should not exceed 28% of your monthly pre-tax income. That payment includes principal, interest, taxes, and insurance. And number 5, the terms buyer's market and seller's market are determined by the average number of days that area houses are on the market. True or false? Number 6, an adjustable rate mortgage is a good option if you plan on selling the home in a few years. Number 7, most all lenders require a title clearance before the closing. And number 8, if you're buying a new home or one that's just a few years old, you can skip getting a home inspection. Number 9, some of your closing costs are tax deductible. True or false? And then finally, number 10, once you have your heart set on a house, it's okay to contact the seller directly and skip the realtors. True or false? All right, so if you go to the back of your packet, you can grab the answer sheet and we can run through those. So number 1, you should get pre-approved for your mortgage before you start looking at houses. True. Just like it says here. And I'm going to kind of scan through. You can read this more on your own here, but knowing how much the bank is willing to lend is going to make the home buying process easier. Again, it narrows down the number of houses that you are going to look at. It just gives you more of a realistic idea of what you can afford. Number 2, before you apply for a mortgage, it's best to open up some new credit cards to boost your credit rating. False. Okay, it's probably one of the worst things you can do, because what that's going to do, it's going to add to your potential debt ratio that you might have and could create some problems for you in the long run. Number 3, the purchase price of your home should be as close as possible to the mortgage amount you've been approved for. Again, that one is false. Just because the bank approves you for a $300,000 mortgage doesn't mean you can afford to make that payment every month. Again, you got to be realistic with it. Number 4, your monthly mortgage payment should not exceed 28% of your monthly pre-tax income. Number 4 is true. Crystal, is that? I've heard as much as 36%, but primarily 28%.
And that's a good number to go with. That number doesn't really affect if you can actually get approved for it. It's more your total debt ratio, but that's a good general guideline.
Okay, well, great. And the next one, the terms buyer's market and seller's market are determined by the average number of days that area houses are on the market. And number 5 is true. If homes in your area routinely sell within a week or two, you're in a seller's market. If they stay on the market for 60 days or more, then that's a buyer's market. Number 6, an adjustable rate mortgage is a good option if you plan on selling the home in a few years. The answer for 6 is true. If you know for certain you're not going to be staying in a home long term or you'll be able to pay off the loan in a few years, it could save you money. We'll talk more about what an ARM is a little bit later. Number 7, most all lenders require title clearance before the closing. Number 7 is true. The lender wants to make sure no one else can make claim on the property. 8, if you're buying a new home or one that's just a few years old, you can skip getting a home inspection. That's definitely false. Every house should be inspected. Number 9, some of your closing costs are tax deductible. And number 9 is true. So there's some things that, again, some of the tax laws have changed, but there are still some tax advantages of it. And number 10, once you have your heart set on a house, it's okay to contact the seller directly and skip the realtors. That's false. Let the pros do their job. Always have your real estate agent communicate your request or concern to the seller's agent. And again, we'll talk about the value and the question about whether or not to use a realtor a little bit later in the program as well. All right. So I'm not going to ask for any scores, but hopefully that gives you just a little bit of insight of kind of where you're at right now.